The CIO of Commonwealth Financial Network said that fears that the US dollar will crash are totally unfounded because the greenback won't be replaced anytime soon. Brad McMillan said that he has been getting a lot of questions about the dollar in the past few weeks. Most of the questions have been about whether the dollar's value will fall and make savings useless. Hello viewers, in this video, we will talk about the US dollar and whether it is under threat. But before we start, make sure to subscribe to our channel and press the bell icon for regular updates. Let's get started. Since a long time ago, the US dollar has been the most important currency for trade and banking around the world. It is the main way to buy and sell things, and it is a safe place for banks and businesses around the world to store their foreign currency reserves. The US has a lot of big economic benefits because it is the most powerful country. Because most international trade is done in US dollars, US companies and consumers are usually less likely than their international peers to face foreign exchange transaction costs or risks from changing exchange rates. Also, strong global demand for dollar-denominated US assets, like treasury bonds, has allowed the US government to borrow money at low interest rates in the past to pay for its spending. But some investors worry that the US dollar might lose its position as the world's top reserve currency, which it has held since it replaced the British pound after World War II. Recent geopolitical tensions may strengthen other currencies, like the euro, the Chinese renminbi, or a suggested common currency for the so-called BRICS nations, which are Brazil, Russia, India, China, and South Africa. The idea of de-dollarization has been around for at least 20 years. As foreign central banks have become more diverse, the dollar's share of reserve currencies has slowly gone down. In theory, more competition from other currencies could hurt demand for the US dollar, which could cause its value to drop on foreign exchange markets and take away some of the benefits that its power has given US institutions and investors. With the economy slowing down and prices going up, people are worried about how stable the US dollar is. There have also been news stories about how the BRIC economies, Brazil, Russia, India, and China, want to make their own currency and get rid of the dollar, especially in oil and commodity trade. Even though there are news stories about the dollar falling apart every once in a while, the US dollar is still the most important reserve currency in the world. Some marginal drops in dollar trade could occur. The US dollar still makes up most of the world's savings. Foreign exchange reserves, which are assets owned by central banks around the world in foreign currencies, are mostly made up of US dollars. These funds are often used to pay for trade or, if needed, to back up a currency. Over the past few decades, the percentage of reserves kept in US dollars has stayed about the same as the US economy has become a smaller part of world activity. But the dollar is still owned by far more people than any other currency. It makes up nearly 60% of the world's reserves. The next biggest asset in reserves is the euro, which makes up about 20% of reserves. Aside from these two currencies, the rest of the currency stocks aren't that big. As of 2022, the Chinese renminbi only makes up 2.7% of the world's savings. Still, dollars are used for most international trade, including oil trade. Between 1999 and 2019, the Federal Reserve thinks that the dollar was used in 96% of trades in North America, 74% in the Asia-Pacific area, and 79% in the rest of the world. Only in Europe, where the euro was still the chosen trade currency, was trade not dominated by the US dollar. Also, most oil trade in the world, which makes up about 6% of all trade, is still done in US dollars. Even though the dollar might lose some of its power in this area, it is still a small part of trade and may still be used in some deals. The US dollar is backed by financial markets that are large, stable, and well-run. The fact that the US economy is strong and stable and that the US has deep and liquid financial markets may be a big reason why the US dollar is the most important coin in the world. The US has by far the biggest bond and stock markets in the world. More importantly, the financial markets are highly regulated and give borrowers and lenders access to a large number of counterparties. Overall, the US still has the biggest economy and deepest capital markets in the world. Even though there are sometimes news stories about the US dollar that may make investors wonder or worry, there is still no real threat to the US dollar's place as the world's most important currency. There may be more changes in the value of the dollar compared to other currencies. These changes could be caused by things like the interest rate policy of the central bank, the inflation rate, and the rate of economic growth. But this is pretty typical of how volatile the stock market is. Fears about the US dollar are not a good reason to change your strategy, but we still tell buyers to think about making their portfolios more diverse by investing in markets and currencies outside the US. This includes foreign stocks and bonds, as well as industries with a global reach, like industrials and materials. All of these could help reduce the risk of investing in US dollars. In the past, foreign stocks have done better when the dollar was weaker compared to other currencies. On the other hand, when the dollar is stronger, US stocks tend to do better. Over the past 10 years, the rise of the dollar has hurt foreign returns, but even a small drop in the dollar could lead to better relative returns. So, a good international allocation should benefit from any weakening of the dollar, which could happen if central bank policies diverge or if global growth picks back up. Over the past 6 months and 1 year, foreign stocks have done better than US stocks, but they still trade at a near-record discount to US stocks. This means that global indexes have more room to continue to do well, and a possible weakening of the US dollar may help this position. That's it for today. What are your opinions about this whole discussion? Let us know in the comments section. Please like and share our videos. Don't forget to subscribe to our channel and press the bell icon for regular updates. Thanks for watching.